Good morning, ladies and gentlemen, and welcome to the show on this Thursday, March 9th, 2023. Thank you for tuning in. I'm glad to have you guys here. I got up this morning to do my show. Went to turn the monitor on, the computer on. Nothing. Blank screen. So, did some troubleshooting. And I wasn't sure. So I think it's a monitor. Because the computer was on, the lights were on inside the computer. The computer would start up and it would make that beep beep sound it makes when it starts up, and I could see the hard drive's working and everything's working on the computer. So I said, chances are it's a monitor. So I ran into Walmart and I bought a new monitor because I want to get my show on the air, and the monitor's just basically dead. So I hooked it up. Sure enough, that was it. It was a monitor. So I'm working off a brand new monitor here I got from Walmart. I just bought the cheapest one I could get. But it just blinked out. Bunk. Monitor dead. Oh well, stuff like that happens. But I'm up here and I'm on the air, and I'm glad to get on the air this early. This was good. Everything worked out fine. Actually, it cost me an hour or two, but still, here I am. Anyway, listen, guys. Fed is going to trigger the next bust. We're getting awful close to it. And I don't think they realize, they're thinking in their mind they're going to trigger a small recession, a very slight recession, something that's very manageable. What they're going to trigger is a monster. An all-out monster. That could actually get rid of all, it could destroy the inflation. Because, let's face it, people can't afford to buy anything. And when the markets fall, big time, when the wealth effect is gone, and already consumers are pretty much tapped out, but you watch. It always happens this way. If you look back at the charts, what you'll notice is that there's always good jobs numbers. When you get your best jobs numbers, that's when the point when it's getting ready to go in the opposite direction and really fast. It's at the beginning, and it's always near the beginning of a recession. You get this low jobs numbers. And then it just explodes the amount of people that aren't working. It's this cycle. We've been through it so many times before, but this time is going to be a really powerful. They want to call it a recession. I'm going to call it a depression, what it really is. That's what we're headed toward. And they're going to trigger it. Here it goes. The Federal Reserve is increasing its federal funds rates from practically 0 to 4.75. They've just zoomed. This is what's going to trigger things. And they said they're going to continue. They're signaling to the markets. They're going to continue to hike these rates in their fight against inflation. So guys, we're on the cusp of it right now. It might actually be already underway. It could possibly already be underway, the collapse in the markets. And what we need is some good news. We're not going to get good news. I think one of the worst news of all that's going to come in very soon is a very strong advance by Russia in Ukraine. And bad news from Ukraine is going to translate into the markets. And I think that's coming very soon. That's the next shoe to drop. Okay, guys, let's get in and take a look at the prices of stuff today. We're looking at $20.09 on silver today. And so we're seeing it's up 7 cents. Let's take a look at gold. There's my gold chart. Sometimes the computer's a little bit slow. I've clicked it. Should bring it in. Come on, gold. There we go. It's doing it. There, 18.28.30. It's up $14.50. So we're seeing a bigger rise today in gold than we are silver. Cryptocurrency today, we're looking at fell back below $1 trillion on the market cap again. 21,471 for Bitcoin and 1527 for Ethereum. I'm going to tell you guys, there's a rough ride ahead for Bitcoin and cryptocurrencies. In the short term, it's going to be a rough ride. Because as these markets fall back, and they're getting ready to, we're going to see the Bitcoin price probably fall back as well. Not necessarily is the gold and silver price going to fall back that much. Because there's a floor, under the price of gold and silver. It's cost to produce it. Taking a look at the Dow Jones today, we're off 80 points today so far. And there's absolutely nothing. Okay, 78 points down at 32,719 for the Dow. There's absolutely nothing here to indicate that these markets are going to go up anyway at all. But the downside risk right now is enormous. So your upside potential on the markets right now is very small, but your downside risk is enormous right now on the markets. Now, what's going to happen is these markets are going to fall, and then they're going to bottom out, and that's when you're going to see a enormous amount of accommodative monetary policy come back again. And so I've said this to you guys before. There's going to be an opportunity in the markets coming up, but you got to wait for it. Good investors, they're very patient. You got to wait for this. Right now is not the time to buy into the markets in any way, shape, or form. But I wouldn't bet against these markets either. I wouldn't put in any anyway. You could lose an awful lot of money if you bet against the markets. Was it put options or whatever? You do an awful lot. The markets are, even though they're getting ready to fall, people always get burned when they do that. Anyway, listen, guys. Taking a look at the S&P 500 today, it's down 8.98 at 3,983. And taking a look at oil's at 76.68. It basically hasn't moved. Okay, it's up 2 cents. Bonds and rates today, we're looking at falling yields. We're looking at a U.S. 10-year at 3.94. It's fell 3 basis points, in the U.S. 30-year at 3.87. And it's fell 0.7 of a basis point, almost 1 basis point on the U.S. 30-year. Taking a look at the U.S. dollar index, 105.28, and it's been going down today, but very slowly. Okay, guys, thank you for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. You guys have a great afternoon. Bye-bye.